Hi and welcome to the Market Alert for Wednesday, the 23rd of June 2021. So stocks and bonds jump as Powell pontificates, cryptos dump and pump from a puke to panic buying. And also here Fed Chair Powell walked back Bullard bomb with uber dovish spin. So he's talking about rate decreases continuing QE just to get rid of what what he said and Bullard, but mainly Bullard on Friday, which sent the market moving lower. So from his prepared remarks, it appears Powell will double down on the uber dovish narrative, offsetting the Bullard bomb from Friday, which he did, which helped the markets, sending the implied volatility down from 1454 to 1382 there. And news today, well, it's that morning. If you trade the DAX, it's the flash, which is out every 15, half an hour sort of intervals. So it makes it very difficult to get anything established because the market will be waiting for the forecast and previous. It allows them to move the market. So it's likely to be bullish. But it's a bit of an annoying morning on the intraday trading front there. So let's have a look at the markets, and we'll start off with the Dow. The daily there, you can see prices having recovered during Monday's session. Tuesday, in response to Powell, doesn't look a big move, but it's a reasonable one, heading back to the 62% retracement that we've drawn in. And yesterday afternoon, an interesting picture in the Dow, the market selling off. It's got this thing where it sells off straight away at the moment and then reverses, and then it was just a matter of trading and waiting for Powell to make his statement later on in the evening, this bringing the market to the upside. But watch for this sell-off in the open and then the buying back of the market with the Dow. In the DAX, we have a similar situation. Go to the daily. Again, you can see that market up yesterday, back above the 20 bar moving average once more, and the 5 bar moving average for the last 2 days, and trading above at the moment. But again, watch these two areas here as the market attempts to move to the upside. In the 5-minute chart, you can see that we held at the sort of high in the futures market, then it started to drift and move lower. We had a bit of a bounce and then back down to the DP. DP is the area where they like to keep the market supported, and then prices again making their way back, choppy but moving back. And then in the afternoon we see a bit of a sell-off before the market opens at 2:30. This is the 2:30 area. As the Dow moved lower, the DAX didn't, and in fact you'll see the retracement there of 78% before prices then moved to the upside and followed the Dow. And in the 2-minute chart, again, you'll see the sell-off from the futures. You start off with the market moving lower, retrace back to the close and the high, and then once we get below the 20 bar moving average, the market moves lower and stays below the 5 bar as well, until we get down to here where we get an 89% retracement. The market moved higher, and you'll see trading up to the BRN there. And also, if you take this bar as the start time, draw back and come back up to here, you'll find that 78% as well. And if you wanted to be really pedantic, inside of here you've got another 89% retracement before the market turns there as well. So prices trade up and then move back again from across here. Again, you can see you've got that retracement and again there, but then each time the market heads to the 20 bar moving average, it fails until they have the final shakeout, and like the Dow at the DP, the market then starts to move higher. And it's interesting again, isn't it, this sort of mid-morning trade that we're starting to see a lot of, where the market moves nicely. And then into the afternoon, as we look at into the detail, you can see there I had this marked up yesterday afternoon, and the market trading in this range, traded in a sideways range between 78s and 89s, and then eventually it broke. You can see the volume there, and then market moving to the upside. And overnight prices currently trading higher than the DP, playing with the 200 MA there and sitting on this at the moment. If we move to a bigger time frame, let's have a look and see where all of these pivot points are. So we've traded up to yesterday's high on the overnight. We can see this. Prices are coming off this. We've got the close here along with the BRNs, of course. What I would be inclined to do in this larger time frame, it's easy to draw in, is this low here, from this low to the overnight high. Draw in these fibs here and keep an eye on these, because if we break 89, then we go down to the DP. All of this flash news here as well today, you can see it all clustered together, but the DP and the 200 MA certainly are going to be the area to look at there. I can just there we go. Yeah, so the 200 MA and the DP there. So keep an eye on those, and if this is broken, then all I do is just come back and then just pick off the next areas, but click in the right places. So this low here up to the high, and this will just add in the areas of where there'll be downside support should prices move to the downside. So I can do that during the session as the market moves lower. But just to come back to the daily charts, yeah, we've got a bit of resistance at yesterday's high that needs to be taken out. As we can see there, the market's had a look at it, and we've seen this in the smaller time frames as well. So let's have a quick look at the metals. For some unknown reason, ETX Capital's dollar index isn't working there this morning. So I can't bring you any news on the dollar. I don't know why, but it seems to have gone off the board there. You see, waiting for update. So not available. So let's have a look at the gold market. This trading at 78.89% from this low drawn up to this high and projected back. Sideways there at the moment, and now Powell has brought some sort of comfort to the market. Let's see what happens. It's just annoying that I haven't got the dollar to look at as a correlation to these at the moment. The silver market similar as well, sitting at the 62% retracement and the 200 MA. The order that I've had in this market has not been filled. You'll see down here, it did trade close to it, but hasn't picked it up. So I'm going to have to reevaluate and probably go down to the 200 MA, see if we get a shakeout there, and then buy it at that level, ready for when the market does start to move to the upside. Next month, July, is seasonally good for the metals. July, August, September tends to be the rally of the year for the metal, so that also ties in with the market finding a bit of support at the moment, but trying to shake out in the 15-minute chart at the moment down to the DP. Again, I'll use a smaller time frame combined with the daily where the 200 is and the 62% retracement. I can see there it's around the 64, so 25.50 or 25.45, which I already have the order at that level. So yeah, I'll have a look in a bit more detail, but I'd like to add more to this trade. So yeah, we've got a bit of a shakeout going on at the moment. This is a 5-minute silver. You can see the spike in volume there at the DP level and the 200 MA as well. This will also be from this low to this high. Takes you to 60 to 78, and just for the fun of it, from this high to this low projected back to here. If you have a look at this as well, these just jump out on the screen. You can see again 78, 89, and you've also got the R1 there, and then you see the selling coming in and the market shaken out down to the 62, 78 and the DP. And these patterns, you'll sit and look at these all the time. Your eyes just get used to spotting the patterns. Again, from this low to here, again you'll see 89, market turns green, off we go up to the R1, then you get the 89, the market comes down to 62.78, and the reason being because we've got the DP in that area as well. And to spot an 89% retracement isn't difficult because you can just eyeball it. So if I just draw a straight across there, I know as the market's coming back, I can just see the distance between that low, and as it starts to trade back, I don't even need to draw it in because I can see, obviously if we hit this, it's a double top, and if not, prior to this, in this sort of area, it's going to be 78 to 89, and it's just attuning your eyes to seeing these patterns. And once you see them, you combine them with the pivot points. Again, you've got a pivot point down here as well as you get that 89% retracement. You've got to drive through the 200 and whatever with some professional buying. You will get some profit taking with selling coming into the market at this area. Then market will drive through again through a sideways area. And then you can measure back on these as well. You'd have to go to a bigger time frame to find out why the market stopped here, whether it's 30 minutes or a 60-minute charts. That's where the market stopped. Again, I can look across to the left, look up here, and I can see that's going to be 62 to 78, and there you go, and there's your 78 level there. So yeah, it's amazing how this works. You just get used to seeing it, and you can just eyeball what's going on in the chart. Well, it looks like a sideways move is actually retracements going on, and you can see each one consecutive pullback, that one through, that one pulling back, there pulling back, and that's how it works. And then it just allows you to find the optimum points to buy. So again, if you look at the bigger time frame now, this is the low to the left to there, takes you to 89. Okay, that should do it for this one. Let's see what the flash news is this morning and how the futures market's going to respond at 7 a.m. But other than that, as ever, thanks for watching. See you in the next one.